In this episode, I talked to Ben McCabe about reverse mortgages. We talk about three use cases for reverse mortgages where they can make a lot of sense for a client. We talk about three places that you can find reverse mortgage clients, as well as three tools that you can use to help you in your business. Reverse mortgage market is a massively growing segment of mortgages, and it's one of those tools. I always called it you think you have a golf bag, you have some golf clubs in there, you've got that sand wedge. You don't use it all the time, but when you need it, you're really grateful that you have it. I believe reverse mortgage is a lot like that. This conversation is going to give you some lots to think about, give you some tools and tactics. Also, Ben has put together a masterclass on how to find and convert reverse mortgage clients. If you follow the links in the show notes, you can go check that out. It's fantastic, and it's a way for you to learn up your game and get better at having these conversations with clients when it's appropriate. Hey, I'm Scott Beckford. This is the I Love Mortgage Brokering podcast, and every week our goal is to bring you tools and tactics to help you improve your mortgage business. And I believe this conversation today will do that. One of the things I want to give a shout out to is our sponsor, Ownwell. Ownwell is an amazing tool for mortgage brokers that helps you monitor your client's home equity and buying power on a monthly basis. It sends these reports that it's like how you can track a stock, but for your home equity and buying power, and creates lots of conversations. These conversations lead to conversion. Check them out at ownwell.ca and check out this conversation with Ben. Hey, Ben, welcome back to the show.
Hey, Scott, good to be here.
So tell me a little bit about yourself and how you got into the reverse mortgage business.
Yeah, so started my career outside of the mortgage industry generally, Bay Street finance, investment banking, private equity type stuff. And then I took on an operating role with a fintech small business lender based in Montreal, and that's sort of how I got into operating in the financial services area. And then saw a big opportunity in reverse mortgages, and what I saw was sort of a confluence of trends that I thought was pointing towards significant growth in this area, and figured I'd take a crack at starting a business. So in 2019, I started building Bloom.
And the confluence of trends being, I would assume, increase in boomers, home equity, traffic. What was I'm putting words in your mouth, but what were they?
No, that's exactly it. So it's basically an aging population. So, our seniors and baby boomers in Canada is the fastest growing part of the population. Obviously, a significant rise in home prices over the last 30, 40 years. So, folks that never earn more than $30,000, $40,000 a year in their careers own $1 million homes or more if they live in one of the cities. And then generally sort of a cost of living challenges and lack of retirement savings and good defined benefit pension plans. So kind of just all pointed to the need for people to tap into their home equity to help support their cost of living in retirement.
Right. So you ever read the book, the Pig and the Python talks with baby boomers, wherever they go, that's where the money flows. And it's sort of that idea. But there's also two other factors in there, which is the home price, which is that equity. And then the second being cost of living as well. So
yeah, that's exactly. So a lot of people who start businesses focus on people their own age, right? So that means that, since younger people tend to start businesses, there's so many businesses that are focused on millennials and Gen Z, and the baby boomers are sort of a neglected part of the population right now in terms of innovation and new businesses.
Right. And there's also an opportunity to take some of the learning from the fintech company and think, how could we apply this to the reverse mortgage space? Correct?
Yeah, that's exactly what we did.
Okay, so I'd love to chat. Reverse mortgages are certainly increasing. The opportunity for brokers is there. And I know you know more about it than almost anybody that I know. So I'd love you to give me some examples of use cases that people have. We're going to talk about a few things, use cases. We're going to talk about where to find clients, and then we're going to talk about some tools. So if you are listening to this and you think, I don't do that many reverse mortgages, you're going to find this very helpful because Ben's going to help break down some of this stuff for you. And then you probably have more opportunities in front of you than you realize.
Yeah, definitely. I mean, I think in the past, Scott, we've talked about how reverse mortgages are sort of like a golf club in your golf bag, right? It's like a sand wedge. Like you're not going to hit, you don't need it for every shot, but when you need it, you need it. And I think brokers are realizing more and more that there are situations that they run into every year with their clients where this is the best solution. And so, most of the brokers we work with do, 5 or less a year. But in the situations where they do make sense, they make a lot of sense.
Right. Okay. So give me examples of use cases where brokers have used this sand wedge to get their client out of a situation or to be the right solution for a client.
Yeah. So first one, sort of bread and butter, the one that, we do, 8 times out of 10 is, a retired or near retired individual homeowner that still has an existing mortgage and is struggling with the cost of that mortgage. So, I'll give you an example. We did a deal last week with a couple in Nanaimo. Retired. Mr. had been sort of a self-employed contractor during his career. Mrs. was an administrative assistant for a local small business, and so neither had a good private pension. Really relying on CPP and OAS, which like so many Canadian seniors are these days. So we're talking like $1,100 of CPP a month, 700 of OAS, and they still had $200,000 of mortgage against their house, right? So about $1,200 a month they were spending on that mortgage, which is about 1/3 of their total household income, right? Leaving behind not that much for everything else that they needed to buy in their life, right? So especially with inflation and the cost of living, feeling very stretched, not having really any disposable income for the finer things in life. And so what we did for them was just swapped out their existing mortgage for a reverse, repatriated or brought back that $1,200 that they were spending, to the bank every month, put it back in their pocket. And for them, that's like a 50% increase in their, call it like net income after that mortgage payment, which is huge.
Right.
So that is the bread and butter deal we do all the time.
So that would be the first someone who's got that still have a mortgage or some kind of debt situation, or their fixed income. Essentially, their income is fixed, but their cost of living have become less manageable.
Yeah, and we talk to people all the time who are in this situation who weren't fully able to pay down that mortgage while they were working, and so carried a mortgage into retirement. It's just with the rising cost of living, has become untenable to service that mortgage. So very easy, reverse mortgage replaces the traditional, and that mortgage payment is back in the pocket.
Right. That's amazing. Okay. So that'd be one example. What would be another example of a use case where brokers are helping clients with a reverse mortgage?
So an interesting thing about senior home ownership in Canada. So about 3/4 of Canadian seniors own their homes, but less than 20% still have a mortgage. So you've got a huge amount of senior homeowners that don't have a mortgage. But at the same time, 2/3 of Canadian seniors say they don't have enough income and savings to sustain their standard of living or to live well in retirement. And so you have this big cost of living crisis among seniors. So a lot of people don't need a big, huge lump sum like dropped into their bank account. They don't need a $200,000 mortgage paid off. They just need an income support. They need an income supplement. They need a bit of cash each month to bridge the gap between how much they are earning from their various income sources and how much it costs them to live the type of retirement that they were looking for. So, we were chatting with a client in Kelowna last week who basically told us, look, I'm short $750 a month. That's all, right? I know what I have coming in from my CPP and OAS. I know what I spend every month on groceries. It's higher than it was 2 years ago. And I'm short $750 a month. And that's what I need. So for us, our home equity prepaid MasterCard was the right solution for her. And generally speaking, when it comes to reverse mortgages, it can be a drip solution as well to help people bridge that.
It doesn't have to be a lump sum that you start paying interest on all right away. Is what you're
That's
saying.
Exactly right. Yeah, exactly.
Right.
And it makes a lot of sense for people who don't need all that cash up front to take it more gradually.
And the cool thing about that is that maybe I'm speaking in generalizations here, but that's what we're doing. I would suspect that most seniors are probably pretty good at budgeting. They understand it better than most young people. And so if they know it's $750 a month, that's probably what it is. And which means now,
You're
okay,
100% right.
this solution is perfect for that. It allows them to use a piece of their home equity without selling their home and without having to incur payments and not having to take on a whole bunch of debt that they didn't need or access to a bunch of money that they don't actually. How does that product work exactly? Because I'm sure people are listening to this going, oh, that's interesting. So maybe walk me through some of the mechanics of it so that if somebody's listening, because the thing I love about brokers, we're creative. When we see it, we're like, oh, this could work in this situation. Give me examples of the ways people could use that product.
Yeah. So, I mean, I'll just circling back to your point around, seniors being better at budgeting than most people. That's 100% right. Okay. Like most of our clients, if our average client is, let's say, 71 years old, which means they've been managing a budget for 50 years plus, right? The average credit score is high. It's like in the high 700s for our clients. Now we service people across the credit spectrum, but it just speaks to the fact that these are not people who are not good at managing their credit. Like these are people that really understand their financial situation. And so many people we talk to say, like, look, I retired with a certain cost of living expectation, right? In terms of what things were going to cost me because inflation had been 2% for like decades. And then I wasn't expecting things to spike like they did the last couple of years. And I have a fixed amount of savings. And my savings is not indexed with that rising cost of living. And so now all of a sudden I'm short. I'm short every month. I'm short 500. I'm short 750. I'm short 1,000. But they know that number. Like that's one of the things that's really amazing is they know that number. So when it comes to our home equity prepaid MasterCard product, one of the things clients were telling us was like, look, reverse mortgage sounds great, but I don't need $250,000 in my bank account accruing interest. I just need to bridge the gap between how much I have coming in and how much I need to have coming out. And so the way that we solved that was to say, okay, well, why don't we just help you bridge that gap directly at the register? So we'll issue you a MasterCard. It's a Bloom branded MasterCard. And as you spend on that product, you basically are tapping into your home equity at the register. And so you're only basically building that reverse mortgage balance when you go pay for groceries, right? Or when you buy a gift for your grandchild. The mortgage balance is basically building, through spending, which is just so much more financially efficient for clients than taking a big, lump sum up front, and accruing interest on that unnecessarily.
Yeah, when you told me about this product, because initially when you first started Bloom, it was more of a traditional reverse mortgage product, and then this is an innovation that you came up with, which I thought was clever in terms of being able to solve the unique subset of your clients' challenges.
Yeah, and there's different clients have different needs, right? So the lump sum
And
reverse
so,
mortgage
with
is
that
great.
product, is there a minimum size it needs to be? Is there a minimum approval amount that you do put in place in order for someone? This could change, so please reach out to bloomfin.ca to ask them. But I'm going to ask today what it is so that people can.
Yeah, I mean, so what we do with folks is like basically we work with them to establish a monthly spending limit. So some people say like, because what we want it to be a sustainable solution, right? Like we don't want people blowing through it all in 1 year, and it's supposed to be like a sustainable retirement income solution. So whether it's $500 a month or $1,000 a month or $2,000 a month, we set that limit with clients, and then but they don't necessarily need to take all that every month. They just take only what they spend is added to the mortgage balance. So it really adapts to clients'
But
needs.
you must approve it for a global amount, similar to how a line of credit works,
Yeah,
right?
that's
How does
right.
that
So
work for what is the minimum global size that you would want to set this up for?
it's the same as I mean, typically I think we like to see at least $50,000 of total spending capacity like available on the card over the lifetime. But what we'll do is we'll just underwrite them the same way that we underwrite a traditional reverse mortgage. If we would authorize somebody for $270,000 for a traditional reverse mortgage, that would theoretically be their total spending capacity on the card as well.
And can this go behind an existing mortgage, or does it have to be a registered first position?
It needs to be registered in first position, but we can marry it with the reverse mortgage as well. So basically, if somebody has, let's say,
Oh,
fifty
if they want
thousand
to do a
dollars,
lump sum and also have access, they don't need all of it. So they want to do repairs or something, or
yeah, exactly. So that's typically what happens. Actually, is people will come and say, "Look, I've got $50,000 on a HELOC. I've got some stuff I want to do to my house, so I want to take $75,000 up front. Then I'll take the card with a $2,000 monthly authorization." And then even in the future, if they want to come back and say, "Hey, I want to, my daughter needs help with a down payment. Can I get $50,000?" If that's still within the authorization limit, they can come back for another lump sum in the future as well.
right? Okay, so that's another use case. So we talked about the first use case being someone who is having has a mortgage and wants to improve their cash flow. This second one's a bit more unique. What will be another use case that people could think of for reverse mortgages?
Yeah, this kind of segueing from what I was just saying was is really the living inheritance use case. It's become so difficult for young people to get in the housing market right now, right? I mean, obviously when it comes to that monthly mortgage payment, but more difficult is saving up enough for a down payment. Like I can't remember what the stat is, but it takes your average Canadian on your average salary, it takes like literally decades to save up enough for a down payment on a home in a major city without support from the bank of mom and dad. But not every grandparents or parent who wants to help their kids out has hundreds of thousands of dollars of cash sitting around just ready to sort of divvy out to their kids. But as we mentioned before, like 3/4 of Canadian seniors own their homes. Like there's this huge amount of home equity that is sitting there, sort of
Hmm.
locked up there. And so what we're seeing a huge spike in over the last couple of years is the living inheritance. So that's like parents taking out a reverse mortgage and then taking the proceeds and giving that to their kids to make a down payment to allow them to get into the housing market. Like we just did one last month, I think, with this couple in Little Portugal in Toronto. Mr. was a handyman. Mrs. had been a housekeeper. Neither of them had made more than $30,000 each during their careers. But they had a $2 million house because they bought it like 50 years ago in Little
Right.
Portugal, in Toronto. So they took out $300,000 of that house. They split it 50-50, gave 150 to one daughter, gave 150 to the other, and they married that with some of the savings they had, and they both bought houses in the same neighborhood. So like that's sort of like the living inheritance use case. We're seeing a really, really big uptick in that use case recently.
Yeah, given that high house prices. Okay, so that's great. So back again to the metaphor of the golf club the reverse mortgage sandwich. That's some examples of your broker. There's probably other examples you think of, but where you can use this solution and it can be the exact right solution for the client. So where can people find more mortgage? If I'm a mortgage broker and I think this sounds great, where some give me some ideas, because again, you know more about this than most anybody that I know. Where would they go look to find more of these opportunities?
Yeah, yeah. I mean, so number one is really your existing database, right? So take your existing database, put a few filters on it. Obviously, filter number one would be 55 plus. So in order to get a reverse mortgage, you need to be at least, like, all title holders on the home need to be at least 55 years of age. Take a look at renewal date. Renewal date is helpful, obviously, and to avoid prepayment penalties. Although, in some cases when that financial situation become difficult enough, the prepayment penalty, we can kind of, just absorb that into the new mortgage, and it doesn't necessarily need to be at renewal time, but obviously that is a convenient time to do it. And then filter by LTV. Obviously, we with reverse mortgages, we can only go up to 55% loan to value, and that would be sort of for like an 80-plus-year-old in a city. So if you have clients with an 80% loan to value, not likely to be a reverse mortgage candidate. But if they've got a 30% loan to value and they're 55 plus, and they're struggling with the cost of servicing that mortgage, and they're retired and their income isn't what it used to be, your existing database can be a great source of reverse mortgage leads.
Okay, and what have you seen brokers do? Would they just reach out to these folks and check in, or send email campaigns, or what are your thoughts there?
Yeah, I mean, certainly when you're coming up to renewal date and thinking about, obviously creates an opportunity for a conversation in terms of how people are faring. Certainly if people are reaching out proactively and indicating that they're having difficulty with making that mortgage payment, the reverse mortgage becomes, an easy conversation to have. And then, I would say, generally speaking, if you're going to run an email campaign, running email campaigns with your borrowers, just having some good collateral, to talk about the solution, is really helpful. We'll get to that a little bit later, but having that, solid collateral to explain the product and address some of the misconceptions around it, and the utility of it in certain use cases can be really helpful.
Right. I mean, you could do. I was just thinking of this as a subject line of an email: a mortgage with no payment, and then,
Yeah.
hey, if you're, and then you put some examples in there and say, if this sounds like you, or someone, let's chat. They may be able to get a mortgage with no payment.
One of the
What's
more powerful
Yeah,
one of the more powerful pieces of language that has worked for us is put your mortgage payment back in your pocket.
yeah,
Because, like, that's how people experience the reverse mortgage most often, right? They're not actually, if people are using the reverse mortgage to refinance an existing mortgage, they're not seeing a big lump sum drop in their bank account for the most part.
they're
The way
seeing
that they're
right,
living it is that mortgage payment is gone. And so if I'm making $3,600 of household income and I have $1,200 going to the bank, that leaves $2,400 left over. If I can take that 1,200 and put it back in my pocket, I've increased my income by 50%.
right. Yeah. So that's the kind of, again, if you're listening, well, you are listening, because I can't imagine how any other way you're consuming this content. I suppose you could be watching. There's a couple ideas there for you to use with your database to engage to get the conversation started. Again, yeah. Okay. What other places would people find first mortgage clients? Existing database.
Yeah, I mean, existing referral sources. So the two big ones would be financial planners and realtors, right? So for financial planners, the reverse mortgage has a really powerful utility in the context of financial planning for older folks, especially as their, like, invested assets, or like the assets that they have invested with their financial planners or financial advisors, are dwindling.
Hmm.
Because obviously you can obviously just add home equity to the total sum of the assets that are available to support standard of living and retirement. And so if you were to, for example, maybe you don't need a big lump sum, but if you could just draw $1,000, a couple $1,000 a month, that's going to slow down the rate at which that managed portfolio is dwindling, right? Which certainly from an advisor standpoint, they can understand that. So educating people on where a reverse mortgage fits in a financial plan,
Right.
it can be really useful. And then for realtors, reverse mortgages can be used for purchases. We do those deals all the time. People use reverse mortgage to purchase a new home. Maybe they're downsizing and they don't want to pay for the new home entirely in cash. The reverse mortgage can be used there as well. So realtors can be a source of reverse mortgage.
You've got people that will buy a property, put the reverse mortgage on right at the beginning. Maybe you said downsize, instead of taking some of the cash they can keep out of the and
Yeah,
use for something
exactly.
else. Right.
That's exactly right.
Okay, that's cool. All right, what will be another place people can find more reverse mortgage
Yeah.
clients?
So the last one would be sort of new potential referral sources. So two examples here. One, it's maybe not like totally obvious, but family lawyers or divorce lawyers, because another common use
Mm,
case is what we call gray divorce, right? And which is folks who, they're empty nesters. The kids have left the home. They're in their late 60s or 70s, and unfortunately they're going through a separation with their spouses, and one of the spouses wants to live and stay in the home. So we did a file recently for a couple in Mississauga, early 70s, and the wife wanted to buy out the husband. Wasn't didn't have enough income to take out a traditional mortgage to buy out her husband. The house had been free and clear, but we could authorize enough money that she married that with some of her resources, put that together, and then was able to buy out her husband and stay in the home. So obviously not the happiest of use cases, but really like an important use case for reverse mortgages
but
as well.
the thing
So
is that I remind myself when I was a paramedic, my boss used to always say, "You didn't cause the mess; you're just here to help." Went
yeah,
to
that's exactly right.
whatever scene I'd go to, car accident, somebody dropped something on their foot. It's you didn't cause the mess; you're just here to help. It's the same thing in this scenario. You didn't cause that situation; you were just here to help. You're,
Yeah, yeah,
and I found
absolutely.
that for me was a good mindset frame to think about these situations instead of yeah. And I don't think it's any different with this gray divorce. I mean, I got divorced recently, and I'm not gray yet, but so what would I be like? I don't even know what to be called. Anyway, okay, yeah, that's good. Okay, so the lawyers, any other ideas there?
Yeah. So one other really great source of potential referrals is providers of high cost services to seniors. The thing that jumps out here is home care. I don't know if you know how expensive home care is. Like for folks that are getting like older and needing care in the home,
Mm,
it's extremely expensive. Like we have a file in flight right now that we're going to close this week or next. It's a 92-year-old in Vancouver, lovely home, and she is incurring $20,000 a month in home care expenses. $20,000 a month
wow.
in expenses. Now, there's like for 99% of people who are in that situation, there's absolutely no source of resources to cover that other than home equity. And so this is like an obvious use case for reverse mortgage to cover that need. And so if you're like a home care provider, you probably run into clients all the time that can't afford your services, right? So having if they know, hey, I know a mortgage broker who can help you. Hey, Mr. Customer, who's looking for home care services. I know a mortgage broker could potentially help you get a reverse mortgage to pay for this. Obviously, you're tapping into that clientele right at the point of need.
Right. Yeah, that's an interesting one. So we talked about existing database. That's obviously that's the low hanging fruit for most people, and even just doing some communication or segmentation. The second would be your typical referral partners, financial planners, because protecting investments, realtors, because there can be people who will buy with a reverse mortgage, and especially in a downside scenario, and then those new client sources, lawyers, and high cost service providers. So which is awesome. But give me some tools that people can use if you're a mortgage broker to help you with this business. By the way, this has been a great conversation. I think people listening to this are going to be taking notes on ways that they can do it. I'm going to make sure if you're listening to this, go check out Bloom. You guys are awesome. So if you're a mortgage broker and you have a reverse mortgage provider, you guys you've been around for a few years, but you've been growing like crazy, and you're doing some great stuff. So check you guys out. That's what I would encourage you. But sorry, keep going to the tools.
Yeah. So we talked about the use cases. We talked about where to find clients, but now it's time to convert, right? It's time to sell for people that actually for this where the solution makes sense. Number one tool is knowledge. Okay. The reality with reverse mortgages, we can't avoid it, is that there are misconceptions around it, right? There are stigmas around it. Some people just are really averse to the idea of getting a reverse mortgage. I can go on and on about why that's sort of rooted in a different era of this product. But the reality is you need to be prepared to address those misconceptions and rebut those misconceptions. So number
Hmm.
one, most obvious misconception or rebuttal that you need to deal with is equity depletion, right? So everybody will say, like, if I get a reverse mortgage, it's going to basically wipe out all the equity in my home. Okay, so now like it's time to root this in reality. So if you look at the history of reverse mortgages in Canada, over 99% of reverse mortgage clients have had equity in their homes at the end of the day when the mortgage is due. For over half of reverse mortgage clients in the history of reverse mortgages in Canada, the equity to value, so the opposite of loan to value, has been over 50%, right? So more than half the home value was equity and not the reverse mortgage. And the reason for that is because people remember one side of the equation, right, which is that the mortgage balance is going to grow. But people often forget the other side of the equation, which is the home value is also likely to grow, right? So the average sort of home price growth rate in Canada over the last 40 years has been like 6 to 7%, depending on the market.
Mm-hmm.
So that's more than enough to compensate for the growing, the growing mortgage balance. And so being able to sort of address that, and we can talk about sort of how we can address that more clearly for clients is sort of the next tool. Okay, so I just want to like run through an example in terms of like how to think about this conceptually, right? So average reverse mortgage deal, let's say a $750,000 home and a $250,000 reverse mortgage. Okay, so
Mm-hmm.
$500,000 of equity in the house. Our mortgage rate right now is 6.69%. That's our posted rate. Let's say that home prices grew at 3% and our reverse mortgage grew at that 6.69%. At what year in that mortgage life cycle, Scott, do you think that the home equity would dip below $500,000, which is the starting point?
Man, I don't even know. Like,
So it's year 15. Year 15
okay,
is the first
yeah,
year.
yeah,
Year 15 is the first year that it dips below $500,000. So we can start worrying about equity depletion at year 15. Okay.
right.
Let's say it's 4% home price growth rate, still well below the long-term average. It's year 35. Okay. Year 35. So
You've lived to be 115.
yeah, exactly. Right. So that's why it's important to be able to think it's important to think on both sides of the coin. Home price growth also happens alongside the mortgage balance. Now, obviously,
Right.
we can't guarantee this, but we can point to the way that things have panned out historically.
Yeah, that's yeah, that's the thing to consider too. Okay, so that's one of the tools or understanding of the misconceptions.
Yeah, misconception rebuttals. I think that's number one. So like that's just being able to rebut sort of the common misconceptions, and we have tons of resources on our website and our broker guides and things like that to help brokers deal with that. The second tool that we'd recommend is that we can talk and talk and talk about this, but having it on a piece of paper for your client is way more powerful. So what we call a financial illustration. So being able to like show them in a chart or like in Excel how that's going to work, how their home price, will rise and the mortgage balance will rise and what that means for their home equity is a really powerful tool. And we have that available for brokers at Bloom if you want a copy of it. So you can just use that tool with your clients and just be able to have that conversation so they can actually see it visually. The other piece of a financial illustration that's super helpful to be able to show clients is their cash flow before and after, because most people don't think that way. But if you can actually show your client, hey, this is how much income you have coming in. This is how much you have going out for debt service between your mortgage and your unsecured debts. And this is how much you have left over. And then if we were to put in the reverse mortgage in place, this is the after scenario, okay? In terms of your actual take home cash. People don't naturally think that way, but when you actually show that to them on a piece of paper, and again, we can provide a version of that for brokers as well. It's so powerful to help that conversation move forward.
Right. Yeah, that's good. Okay, any other tools that are helpful?
Yeah, and it's like it would really just be overall information packs for clients, easily digestible. Because what often happens is, we or the broker will have a conversation with a client and address the misconceptions and walk them through the financial illustration and get the clients comfortable. But then it's Easter weekend and they meet with family or they meet with friends, and there's inevitably somebody who thinks that they know a lot of reverse mortgages and have very negative ideas about it. And instead of relying on the client to be able to, educate their family members who are often going to be part of that decision making, if you can actually have some really strong collateral, like a really strong information pack, they can use that as to aid that conversation as well. And again, that's another thing that we can provide to brokers as well.
Right. That's good. Okay. So quick recap. We talked about the use cases, right? We talked about the places to find clients. And we also talked about some tools, knowledge being one of them, using these cash flow analysis that you have, as well as a chart of home equity growth and reverse mortgage growth, which you guys have access to. We'll put links to all this in our show notes. Where can people find you online, Ben?
Yeah, you can check us out at bloomfin.ca or send us an email to info@bloomfin.ca. Depending where you are, we can hook you up with the right BDM.
And is there anything I didn't ask you that I should have asked when it comes to reverse mortgages? Is there any? I like to leave that question.
No, I think we covered a lot of ground. Like it's a product, like it's growing. The reverse mortgage market generally in Canada is growing a lot faster than the traditional mortgage market for like the reasons we touched on. And I think more and more brokers, every year are adding this tool to their toolkit. Like we mentioned before, it's not the club you're going to use on every shot, but there are so many use cases where it's definitely the right club to use.
Yeah.
And I think more and more brokers are realizing that. And so it's incumbent upon brokers to get educated on this product and figure out how you can use it to serve clients.
And serve your clients. Awesome, man. Thanks for chatting with me.
Thanks, Scott.
Thanks again for listening. Hopefully you got inspired from some ideas what we've had. Definitely go check out Ben's free resources that he's put together. They've got a great company that he's created. It's been growing like crazy and helping a lot of Canadian borrowers. Check them out, bloomfin.ca. Thanks again for listening. I'm Scott Beckford. And as I always say, there's no problem in your mortgage business that hasn't already been solved. Your problem is who's got the solution to my problem. This podcast's goal is to provide some of those solutions. Thanks for listening, and I will see you on the next episode.